Goldinvest. Explore opportunity.
Thank you, Bahay, for joining us again. Over the years, we've had quite a number of these fireside chats, but I think this one really is very special because the company just came to announce a very long-awaited milestone. And that milestone is the securing of a 10-hectare site for the future Brine Management Complex. And the purpose of this call really is to give more color on some of the details. Why did you select this site? What are the next steps in terms of permitting, in terms of funding, and so forth and so on? I would say the floor is really yours to give us more color here on that major milestone.
Yeah, for sure, Sven. Great to be with you. And yes, we do get some great feedback on some of these discussions where I think we get to do a bit more of a deep dive that perhaps we, don't get to always doing sort of the formal ASX announcements. So yeah, appreciate the opportunity. Important place to start, Sven, perhaps, is to suggest, and I'm looking forward to providing an overview. Obviously, there's a lot of confidential details, so we have a lot of partners that we work with, and similarly, we can't sort of disclose information that's not market-sensitive information that's not already in the public domain. So I guess I just want to sort of start off with that sort of high-level disclaimer. Having said that, it is, of course, an exciting milestone for the company, and I'd suggest probably an exciting milestone in a series of events. So right through from technology development through to partnering through to securing a site. This is just another step towards where we want to get to, and that might be a good place to start, Sven. Like, where do we see this site? What do we expect it to become when it grows up? So really at full scale development, we expect this site in the heart of the CSG industry, Sven, to be able to take delivery of waste brine from the coal seam and gas industry, to be able to store it, to be able to process that brine, convert it to chemicals, industrial chemicals, and use that to supply local supply chains. So that's ultimately where we want to get to. There's a series of options we have available to us about how we progress that. So if you recall at the beginning of this journey, Sven, we were of the view that we have a very valuable technology in terms of processing these complex brines. So that's been a journey in itself. And at the time, our thinking was we'll simply license the technology. We're not in the business of developing critical infrastructure. And that was the business model that we were pursuing. In many respects, that's still our preferred business model. But ultimately, we've gone through a process to work out how do we capture the most value from this technology. And ultimately, the companies that this technology delivers the most value to, the CSG companies, they're not the natural owners of industrial water treatment infrastructure. That's not what they're in the business of. And even the production of chemicals is even further removed from what is their core business. So we've done a fair bit of work over the last few years to work out if this is the value that we can create through our technology, where should Parkway participate in that value creation process to make sure we capture the most value. So we have our own internal strategy planning sessions, but ultimately this is sort of a bit of a rolling as market dynamics change, as opportunities present themselves, we keep assessing that. And if we sort of go back to when we first provided significant details on this opportunity about 2 years ago in the master plan, we provided, somewhat of a manifesto in terms of what's the scale of this problem. For those who are new to the story, there's 6 million tonnes of salt that will be produced by this industry. Roughly 3 million tonnes has already been produced. The other 3 million tonnes of salt will be produced in the remaining 10, 20 years of the industry, or further 30 years of the industry. And there isn't any long-term solution. This salt is sitting as salty solution in a series of ponds in central Queensland, basically. And so ultimately, the industry, part of their approval conditions are that they will sustainably manage this liability and ultimately rehabilitate. That's a very fundamental condition some very significant, national, multinational companies have committed to. So that's already a financial obligation that already exists. So when we step back and we look at this opportunity and challenge, we've work with companies that we could license technology. We could work with other companies who build wastewater treatment infrastructure. We know all the players of liquid waste management solutions. We're having a series of discussions. But ultimately, when we look at where we are as a technology owner with some project delivery capabilities, and ultimately the ideal scenario is you own all the infrastructure, and we own and develop all of that. There's, as a small company with big ambitions, that will present some challenges. But from where we are right at the moment, we absolutely believe we can get this project permitted and approved. We think we can take this, deliver a full feasibility study, and we think we can make a final investment decision on a small to medium scale plant ourselves. This is all within our capabilities. Now, at some point, it will make sense whether we partner with an upstream CSG company or whether we partner with a downstream chemical company. But ultimately, how we partner, when we partner, that will be dictated by us in the best interests of Parkway. So this is not a scenario where we are a junior oil and gas company trying to drill a $200 million offshore well where we just can't move forward unless we farm out the project. We have no capital obstacles in the next 12 months to create value. So from our perspective, if we had partnered 18 months ago when all we had was the technology, the terms we could achieve, we would have given away a lot of the economic value in this technology package. Now, having a site, all of a sudden we bring more than technology, we bring a development opportunity, but pre-permitted. So we can secure more attractive terms. Ultimately, where we want to get to is have a shovel-ready infrastructure project, fully permitted, the only permitted facility of its type in the heart of the industry, capabilities to develop that ourselves, and we think that's in the long-term best interest of Parkway shareholders to be driving the best deal we can. And this isn't necessarily our base case, but to outline the sorts of things that may involve. At the moment, this site's divided up roughly into 4 stages. Sven, I think you might have seen a polygon, roughly 10 hectares. Now, at the AGM, we are going to provide a lot more detail, but just at a very high level, just so I don't sort of get into sensitive info. It's notionally divided into 4 stages at the moment to that site. And each of those 4 stages is intended to process a quarter of the industry's salt, 1.5 million tonnes. So that gives you a rough idea of the capacity of those projects. A single stage of that project, the NPV of that is, we could make some assumptions around the value, what we're going to charge for a waste management levy, cost of capital, development timelines, many assumptions. But just if you just extrapolate the numbers from the master plan, so I don't want to represent we're releasing new numbers here, but if you extrapolate the numbers we published in the master plan, apply to this sort of size and say, oh, right, that's the sort of thing that Parkway is delivering, you're talking plus or minus $1 billion NPV. These are significant material projects to Parkway, and I just want to make sure I'm not providing these numbers for guidance. I'm just trying to provide a sense of the scale of these projects. And it's not even enormous. I mean, it's not, because the NPV is so large, it's not to say that this is insurmountable. Like in water treatment language, these are quite small plants, actually. You're talking about 1 or 2 million litres of wastewater being treated per day. These are not enormous, but it's very specialised. Because the brine's concentrated, it presents a lot of challenges to process. So that single stage plant, for us to be able to develop that. So from our perspective, you can see if we were to develop just that single stage, that will be a complete company maker for Parkway. And even if we had to sell down 20% or 50% or 75%, it would still be transformational for the value of Parkway. Like, yeah, again, I'm trying to resist sort of putting valuations around it. So if that's the case, the question for us is then, do we really want to give away a large amount of equity this early in the piece? Or do we really want to say, if this is the size of the prize we're looking to develop, do we develop a half size or a quarter size or a 1/10 scale commercial demonstration plant on site? And this is the sort of thing we could do next year once we get permitting in place. So they're the sorts of things we're evaluating at the moment around what sequence of events within our current capabilities will create the most value for our shareholders. And maybe just to sort of square off the sort of information we plan to release at the AGM, we intend to outline, look, this is 4 stages of the project. It's the first stage we're seeking permitting for at the moment. What's the indicative permitting timeframe? So we've indicated we're aiming for mid-year approval, to have all the approvals and permitting in place, not for a demo, for a commercial plan. So all the road and environmental approvals to enable us to proceed with the development. There will be additional construction permits and things like that, but the actual project will be permitted. And then we'll also provide some metrics around the indicative capex for what each of those stages would be. On that note,
you're talking about permitting. What is the let's say expected timeline for this first stage? Also taking into account that this is an agricultural land that you actually in the middle of. Yes, it's well accessible with infrastructure already, electricity, roads, everything. But I imagine it's a sensitive decision to permit such a chemical plant ultimately. So that's why I think it's important to really ask the question about what is the realistic timeline moving this permitting process forward.
Yeah, understand, Sven. Probably, so it is a process we understand very well. A couple of data points I will give you to say within a 10-kilometre radius, of this site, there are multiple gas processing facilities. So where they're compressing, handling gas. There's a number of brine storage facilities. There's a number of transport routes. There's pipelines, electrical infrastructure. So this is not, I don't want to suggest it has no agricultural value, but it is already a very industrialized area. And in fact, the region is called Crossroads. It's at the intersection of a number of major regional roads. So the infrastructure that we're proposing is by no means unusual or uncharacteristic, so that's important. But you're right, the project does require what's called a material change of use. So a development approval will need to reflect that. There's some commercial constraints around what I can disclose, but what I can tell you is that this site has already received development approval to build a renewable energy precinct, a solar and a battery energy storage site, like the exact area that we're working on. That was one of the appeals. And even an intersection from this project to the main road has already been approved. Now, we won't be able to necessarily use that approval. We'll be preparing our own approval for our own use. But the fact that a significant industrial activity, construction work, operations and maintenance at this site for a similar footprint has already been approved sort of gives us some confidence and encouragement. And what I will say, I don't want to disclose sort of discussions we have sort of in confidence, but we felt comfortable going public. We've been working on this site and this area for many years. This is an area we understand well. Okay. And the only reason we decided to go public and formalize our agreements, we've had an MOU on this site for more than a year. The only reason we decided to go public is we were having discussions with other landholders, other stakeholders. We're engaging with council. If this is the sort of site we want to be developing, what are your views of this location? We have what's called pre-lodgement meetings. So we've done a lot of that work. So we have a very high level of confidence that this site will be suitable. Having said that, I think the broader point you're touching base on is stakeholder engagement. Do local landholders, does the community, does the industry, do they feel like they're winning from this? Is this going to improve their lives? And that is absolutely, that's not just a box we need to tick. There's a whole local procurement, local engagement, community benefit aspect to approvals that we're absolutely committed to. I mean, if you look at the heart of our business, I mean, this whole thing is driven by converting the community's environmental liability. They have a big extractive industry that's created a liability, whether they like it or not, regardless of how many football teams gas industry sponsors, that liability is still there. And ultimately what we're doing is coming up with a permanent solution to resolve that liability and also create jobs and opportunities and investment in those communities. So I think that's quite sustainable. And just to sort of give you another perspective of it as well, Sven, here we have, our ultimate clients are the gas company. So, we obviously, we want to be collaborative. So I don't sort of want to antagonize them. But what I would say is, we recently saw a gas company release, some media that they're producing some water, for example, making that water available for local landholders and local farmers. And that's great. So the farmers get access to free water. And if there's a well on their farm, they get paid for locating that well on their farm. That's great. But some of these farmers have been there for multi-generations. And what's going to happen in 10 years or 20 years when their gas well is no longer productive? There's no more income from the gas well, and they've built a farm that relies on water from the gas production, and that's finished as well. So now there's no water, there's no gas income, and then there's this liability, and the gas company says, I think we're probably done here. Mm-hmm. So, if we're talking about long-term sustainability, the sorts of investments we're talking about making will, in many respects outlive the gas industry. Those ponds will take many, many years to rehabilitate. So I didn't mean to go into the deep dive on, long-term sustainability, community engagement, but that's something that is very important for this initiative. Yeah.
Okay, so we covered permitting and social license in a way. So you feel very encouraged by that. But still, it has taken, let's turn back a little bit. We've met 6 years ago, actually, and it has taken, it's quite a ride to this point. Now, the question I think that a lot of people are asking themselves that are involved in the story is, what is the timeline for unfolding that technology now? Is it going to take another 5 years? Obviously, the intention is for this to last for the next 30 years. I get it. But I think I'd like to get a little bit of a handle on what to expect in the next 1.5 years, maybe. And I was struck by the mention in your latest news release that you actually confident to start first, let's say, implementation of a first plant by mid of next year, which might be a little aggressive, but still, I was knowing how conservative you usually are. I found that quite a bold statement. So maybe let's get some more meat on that question here.
Yeah, no, look, I mean, good questions. Again, maybe just to take that last part around the reference we made to a potential sort of development timeframe. Yeah. We did caution it a little bit that, of course, that's subject to approvals and other decisions, but that's right. So the basis for that statement, Sven, was that if we have, so in parallel with this approval process, Sven, we're updating our internal feasibility studies to produce a definitive feasibility study. Mm-hmm. So our internal timeline is that by the time we have internal approvals, and again, we're targeting middle of next year, approvals can slip, but we're doing our best to keep a very tight schedule. So the plan is by the middle of next year, if we have all our internal approvals in place and we have a definitive feasibility study that a lot of the engineering work and detailed design work we've already done on this project for sort of a number of years now. So we keep refining that. So the goal is if we are development ready by the middle of next year and we have our approvals in place, if we are not subject to any additional third-party constraints, particularly if we're talking about a smaller, 1/4 scale plant, for example, and we think we can finance with some prepayments and some debt and we can develop that ourselves, we certainly can break ground subject to those things being in place earlier. Now, having those approvals in place, if we decide why would we develop a $5, $10, $20 million development, if we have confidence to develop $100 million development, then obviously the feedstock agreements and the tolling agreements we would need and the product offtake agreements, that will require more detailed work, that's more dependent on third parties at that time. So that will obviously push out the time frame, but as a result, you'd be developing a commercial scale plant. So there's a little bit of work that we'll need to work our way through. So in the next month or so, we'll be releasing what the indicative timeframes are and what that critical path looks like to give the market a bit of guidance around, when do we expect each of these stages to happen. So quite frankly, all four of those stages, the market can't use at the moment. The last stage 3 and 4 will be in 10 plus years time when projects that are further afield will need to be sorted. But there certainly is one stage that's well overdue at the moment, and the timing of the second stage will be, to be confirmed. In terms of timelines, I mean, obviously these things are always a long journey. What I would say is 5 or 6 years is a long time, like it absolutely is. The industry's been working on this problem for 10 plus years, and they've spent hundreds of millions of dollars to try and resolve this problem. Yes. They've built 2 brine concentrators for $1 billion. They cost $90 million a year to run, not to solve the problem, to concentrate brine so they can kick out the problem to a future date. So this is an enormous problem that some very large well-resourced companies have spent orders of magnitude more money and certainly multiples of the time we have to attempt to resolve this problem. So whilst from a shareholder's perspective, clearly no one is more in a rush than I am, Sven, believe me. I mean, every moment, every Gantt chart, every consultant, every internal meeting we're sitting on, constantly revising timeframes, what's holding this up, and, trying to be as aggressive as we can. But ultimately, some things are inherent, like in this approvals timeframe, 6 months of it is statutory timeframes. Like if you add all the periods, and that's without any delays. If there's certain reassessments, reevaluations, immediately it pushes that out. So some of these things just take that long. I guess the important thing for us to keep in mind, from my perspective, having a site adds value. Having an approved site to develop something like this, brine processing infrastructure at that location, even any development decision, in my mind, having an approved site is very valuable. I'll just give you an anecdote for a second, Sven, about a company that I worked with sort of 10 plus years ago. I was a CEO of a division of this energy company. And the very, very brief, you know some of the sort of directors involved in this, but I don't want to name the company. They're developing power generation capacity in Canada at the moment. And they identified a number of sites several years ago, and they haven't developed any of those sites. They were going to build on-site power generation. In the meantime, this whole data center craze has kicked in. Everyone's trying to develop projects. This company has just a couple of very early stage projects that have some grid connection sort of options. It's pre-development, no detailed sort of analysis. They just sold a site last week for $20 million, the rights to connect at that site. They don't own the land, they don't own anything. And that's and this is sort of a company, similar capitalization to us, in many respects less advanced than what we are. And I don't mean to bring that up as some random example. They're an ASX listed company. I'm bringing that up as an example to sort of highlight, once you've got a pre-development type opportunity, even before FID, if that's a critically highly valuable site that you have approvals that are otherwise very difficult to obtain, in my mind, pre-development, this project should be valued with that sort of quantum, even before we've spent $1 on that. And once we develop a smaller stage, or we enter into commercial arrangements regarding the larger stage, even before anything's built and operating, there's no reason why Parkway or even QBS shouldn't be valued at $50 or $100 million and for this to be accretive. So from a shareholder's perspective, we do not have to develop the whole site, have everything operational, be paying dividends for this to be a success. If that was happening, we'd be a top 100 ASX company, and everything will be rolling on. And there's a time to invest in those companies as well, of course. But for where we are at the moment, our job is to keep executing in an accretive way. So each decision we make, like, there's no point us selling a 50% interest in QBS today for $10 million and think we did a great job. And then our partner comes in and says, yeah, you know what, the board hasn't approved the next stage. I think they're going to sit on that option for 3 more years. Then what are we going to do? So they're the sorts of strategic decisions that we've got to, I don't want to say, just think long term and completely avoid the short term requirements. I get, there's shareholders and there's various drivers, and it's a fast moving world and we're all fighting for capital. Like, I get that, of course. But ultimately, my job is, if I can increase the probability of building that, critical infrastructure that at the sort of scale we're talking about is $1 billion type opportunity, then, that's what we've got to be focused on and ensuring we deliver.
No, I think you made that point just at the beginning. We increase the value of the company by not just offering a license, but now even a solution with a concrete, eventually now soon to be permitted site. And then on top of it, I was thinking that Parkway, and that's leading to the next question, is also in a specific situation that of that development work, you did feasibility, but you can also execute, I guess, I would imagine, quite a substantial amount of the necessary installations and work. Can you give us a little bit of guidance, or not guidance, but an idea of how much of, let's say, of that future plant could be built eventually by Parkway itself, because you have the capabilities with Tank World?
Yeah, look, for sure. So in terms of capabilities, we have a lot of capabilities in project delivery. A lot of that is determined by who's funding this. So if we're funding a smaller scale development ourselves, then obviously we'll want to self-perform work that's within our capabilities. If this is a larger scale development, particularly if there's debt funding or external investors, they themselves will have an owner's engineer, lender's engineer, and they themselves will perform a risk assessment and determine what's appropriate as well. So there's some commercial constraints, but we're very familiar with working in those sorts of EPC type environments. But putting the contractual stuff aside for a moment, certainly a 1/10 scale, 1/5 scale, $10, $20, $30 million plant, delivering that ourselves, we do that sort of stuff every day. So that's very much within our capabilities. that full commercial scale, $100 or $200 million development, most certainly will have a development partner, operator, strategic investors involved, then we probably wouldn't lead the delivery of that. We would hire like a tier one EPCM or Worley or something. And what we would do is to take ultimate responsibility. We would engage them to deliver the project. But then what we would do is take on the scope that was within our capabilities. We'll say the structural mechanical piping work is within our capabilities. The process plant is within our capabilities. These are equipment packages that we're supplying. But then there's other scope that's outside of our core competency, and we would subcontract people to do that. But this isn't dependent on Parkway self-performing, even though at a smaller scale, there's advantages of self-performing because we can deliver the project in a way that's efficient. We can manage our own risks. It's in many respects lower risk delivering our own project at a smaller scale. But once you're delivering a plus $100 million project, I think it would be inappropriate for us to represent that we're going to be delivering that. Yeah.
But, eventually, building this plant could even also add to the bottom line in terms of your operational business. Okay, this is what you do.
I place very little credence on that, to be honest, Sven, because for me, when I'm wearing my QBS hat, I just look at it from a QBS perspective. Okay. This has to be bankable. This has to be investable. Yeah. I have to convince the regulators that this project is the best option. I have to convince industry that this is the most logical, safest, most efficient. Yeah. And when I'm wearing that hat, Tankworld's in Melbourne. This project's a couple of 1,000 kilometres away. We're working with some local engineering companies that we've sort of got some partnerships and arrangements with. So certainly we'll be practical and logical as best we can. But what I don't want to do is present ourselves as cowboys to the industry saying, oh, don't worry about it, we'll sort it all out. And they're sitting there going, really?
Yes, okay. But ultimately, the goal would be, to develop this in stages. I got this, and make the first stage potentially as big as a 100 million plus undertaking, but still not giving away equity. At least not on the Parkway level, I'd say, but most likely on the level of your QBS subsidiary. Have you got, that's probably to be negotiated, how much you need to give away to attract the capital necessary.
For sure. And obviously, like all these things, Sven, if you're developing a project, the more advanced and de-risked it is, the less equity you have to give away to be able to finance the remainder of the project, of course. So in many respects, given our baseline is that we can get this project permitted, develop a smaller stage one commercial, it could be 1/4 stage, we can fund that. That's not necessarily, again, our base case, but if we were to do that, then the commercial scale plant, we could sell a minority interest of a plant that will be worth many hundreds of millions of dollars, and to the point where we don't have to put up the development equity. So there's some value optimization type activities there, and we've got having various discussions at the moment, and there are certainly already at the moment opportunities to partner and sell down equity, but what we're trying to do is constrain that, ring-fence it from Parkway to QBS to just stage one to ensure we have a lot of that optionality. So a lot of the interest we've had at the moment is at a QBS level to be able to own technology in the development roadmap, but that's not of interest to us at the sorts of valuations we're talking at the moment. And incidentally, Sven, I think the valuation we could achieve in QBS exceeds the valuation of Parkway at the moment. So there's some appeal, but I think we've just got to be strategic here and not get sucked into what could look like a sugar hit in the short term, but then stitch up the process. Because you see this happen a lot of times, particularly with technology, where the big player in the industry looks like they're making a strategic investment and everyone gets excited. And then the milestones stop appearing on corporate presentations. And then you realize this was a mothballing type initiative, where it was sort of go slow, and we're too driven to get sucked in by a check that looks attractive at the moment. We've got to just keep executing. And just to sort of go back to the beginning, sorry to jump in there, Sven, but just to go back to the beginning, this is an industry that's worth more than $100 billion.
Yes.
Dealing with this waste is not negotiable. And if we have the only permitted facility that the industry has to use to treat their waste brines, that's a pretty nice place to be. I'm not sitting around thinking, are we going to be able to get a partner, or are we going to be able to fund this, or is the industry going to be? None of those things concern us. My biggest objective at the moment is get the thing permitted and work out what the most accretive option to develop stage 1A, 1B, offtake, tolling agreements. There's many different ways we can fund this, but at the moment, up until permitting, there are no constraints. And keep in mind, we've been spending hundreds of thousands of dollars at a time funding this sort of evaluation, feasibility, partnering work already for a number of years here. So we're going to just keep developing this opportunity until we have approvals, and with a definitive feasibility study and approvals in hand, we'll have many, many options to progress to the next stage.
Maybe on that note, just for understanding, is it required to build upstream and downstream concurrently, or could you choose to do that also in stages? Build the upstream pre-concentration activated brine first, and then at a later stage come up with the downstream?
The short answer is we could, and I know you were making reference to sort of timelines and progress before, Sven, which, I note. If you look at some of the announcements we've made over the last couple of years about technology innovations around processing and electrochemical technologies, what I would say is we've developed a process, and if you sort of string a few technology announcements together, that the idea of integrating these plants isn't just one of co-locating them. We've developed some innovations where we can take concentrated brine and go straight to an electrochemical plant. We don't necessarily have to go to a salt product. So in many respects, this may well be just one integrated plant. So we take brine at one end, produce chemicals at the other end, and it's faster, cheaper, more technically practical. And they're the sorts of things that are sort of going into this feasibility study at the moment. And I know you're familiar with the process, but for those who aren't familiar, I just want to sort of clarify. The whole point of going through like a definitive feasibility study is what you're doing is you're going out to vendors that will be providing some of this equipment. If it's a membrane process, a nanofiltration process, or a evaporator or a crystallizer, you go back and you provide your specifications, and they give you confidence around whether that equipment package can do what you need it to do, what the commercial terms are. So the idea is your feasibility study effectively becomes a roadmap of what you intend to build. So at the moment, they're all existing, in many respects, Parkway's already a representative or a reseller of those equipment manufacturers. So we have a very, very good understanding of all those options. But ultimately, our goal is to develop this as an integrated plan. So although we can develop things in stages, I think that captures the most value. Because if you think about it, the reason industry, because initially, Sven, we thought we're going to just sell technology and it's going to produce chemicals and everything's great. Or even we were talking about concentrating on site. We'll go back and we'll take 2 ponds worth of brine, we'll concentrate and we'll put it in 1 pond. Isn't that great? You've got an empty pond now. Like, that's good. But the real liability is still in the 1 pond that now still stores all the salt. So until you make that salt disappear, it's still a regulated waste. You still have to report. You still have to monitor. It's still a liability.
Yes.
So the idea of just taking the brine, cleaning it, and concentrating it, and even producing a salt, like, of course we can do. We've got lots of experience in doing that. But the real value is in on-site. The client drops off a tanker, 30,000 litres of brine. It contains 6 tonnes of salt. That could be a $10,000 liability. I want to give them a certificate at the end. They've got an ISO certified supply chain that we sequestered that product. We dealt with all the waste. We produced chemicals, and that's why you're paying us X dollars per litre or cubic metre to treat their brine. So that's an important part of the value proposition. It's like that. Think of it like a battery recycling type sort of scheme, or when you go to recycle your tyres, the guy's not just throwing the tyres in the back of the shed. You're paying him good money because he's reassuring you that that's going to be recycled. It's not just going to be stored out.
This is the whole idea about the circular economy, which would be trailblazing for this industry in Queensland, but certainly beyond Queensland, because that's always the idea that I think is, okay, this will be a poster boy showcase operation to demonstrate the viability of this. And if it works, I can't imagine that anywhere else the CSG would be able to operate without implementing this best available technology, right? So that's the even bigger picture for me, at least as a shareholder as well.
No, look, definitely. I mean, I think we made or we did make reference in the ASX announcement in the quarterly about another opportunity we're working on at the moment. And there's another major state in Australia, one of the major populous states. And in the last year or two, the major water utility changed its discharge requirement. So previously, if I ran some sort of industry and I produced a salty waste, I could just release that salty water into the sewer network, into the wastewater network. But those limits have been decreased recently. Now you're unable to discharge salty water into the wastewater network, and as a result of that, all these major industries in a very significant state, multi-billion-dollar industries, are now panicking all of a sudden, going, "Where are we going to deliver our waste brine?" And so those major companies, and I'm trying to resist naming those companies, but these are household names. Many of them are European companies, Sven, right, that operate that liquid waste management infrastructure in Australia, a number of large Australian companies as well. Several of them have reached out to us saying, "Look, you guys have got some brine management complex. What sort of volumes can you guys handle?" It's like, guys, I mean, this facility hasn't been built yet. We're still planning, but what sort of volumes will it be able to take? And frantically trying to find solutions for this waste brine. So in many respects, this isn't a CSG specific issue at all. I mean, this is an industrial issue that affects many industries across Australia, and we've focused our brine management complex on the CSG industry, but absolutely there will be sources of brine from power stations, including in Queensland, and alternative sources that we will be able to accommodate. So it would be entirely feasible, Sven, for the first stage of this project to have some or a large proportion of the brine to be from outside the CSG industry, where commercially rational, and in many respects that may even provide an accelerated route. With the CSG industry, these brines are what's called regulated wastes. To transport the waste, the CSG companies need their own permits to be able to transport that waste. So we're very, very pragmatic. There is so much demand to treat this sort of wastewater, this waste brine, that we're just getting on with it and, moving forward and letting those options fight. If people can make commitments for offtake or pre-treatment or tolling or capacity or equity investment or many different respects, but we'll assess them on their merits and work out what's in our best interest.
Yes, you made reference to outside CSG related requests, basically for an interest for this processing, and I imagine now that those parties see that this is getting to the next level where they know the location potentially, they know they're soon going to be knowing the permits and everything. I can imagine that there's a lot of interest there. I think I would say we've covered the technology side of things for the time being, if you agree. But I just would like to come back to also the fact that you managed to transform this company as an engineering operating company and allowing all these developments while you are starting to be profitable now, I think for the second quarter in a row. Maybe for a moment we also talk about that business and which even includes this business where you supply, let's say, equipment to the industry and how that might be. It seems, relatively speaking, a distraction to QBS and all of this. It's where you started actually, but it's now looks almost like a distraction, but it isn't. We've talked about it, so I'd invite you to give a little bit more detail on how you see that side of the business evolving.
Yeah, for sure. Probably the best way to start, Sven, is to say, since I know it's not a distraction, but, since you sort of raised that point, what I would say is definitively, if I thought that business wouldn't help us deliver our technology-related objectives, we wouldn't have developed and grown that business. It's as simple as that. So, because it does require resources and focus. But the reason we're investing that is because it does assist the technology part of our business. It assists us with sourcing equipment. We're doing a lot of iterative sort of process development. When we're looking to roll out new technologies, one of the biggest risks is often what equipment are you using, what performance guarantees, what's its durability, are you working with reputable vendors? So us being an agent and having an established track record of, we want to install UV disinfection, we want to install ultrafiltration. The government agency says, but how do you know these pressures will be safe? Because we say we've been installing them for 5 years. This is an international brand. So it gives us the credibility, as opposed to saying, we're going to import it from China and we have no QA documents, trust us. Like, this is ultimately how technology developers who don't have that operating business, they're not bringing their domain expertise. So it's critically important for credibility and actual genuine product knowledge. You become more confident in it. If you're designing it, if you're installing this equipment and you're supporting major chemical companies, like you can see from some of our presentations, we're supporting most of Australia's large mining companies, most of the large oil and gas companies, many large industrial companies. We know what their requirements are. We know what their concerns are. We know what the standards they want to hold us to. And so I think it puts us in the game. It keeps us sharp. So I think it's definitely important. Separately, some of those customers we already work with in what I call internally, I like calling that our picks and shovels business in terms of our operating business. But what it also does is many of those industrial companies are also potential clients in the technology part of our business. So there's a whole for all these companies that are our target customers for the technology part of our business. Many of them, Parkway is already an approved vendor. So in their system, if their procurement manager types in reverse osmosis membrane or chemical dosing pump or thermal camera for safety, whatever it happens to be, that's, I think, important to put Parkway in front of those customers. And then I think the third element as well, Sven, is there's nothing that scares me more than having a $500 million market cap tech company that's raising money in a hot market and then doing up rounds and everyone's high-fiving themselves. Then capital markets tighten up. They try and get a project off the ground. People think, well, hang on a second, you guys are burning $50 million a year. How are you guys going to meet your bank guarantees or your environmental bonds? Or you guys are a loss-making sort of enterprise. So people in capital markets sometimes understand there's long duration technology companies it can make great sense to burn through a lot of money. But when you're trying to convince people in a local council, for example, or some plant operator who runs some industrial plant who wants to pay you $1 million a year to take their waste, they don't necessarily see it that way. They see it as, look at this little company here. They've got barely a couple $1 million in the bank. They're burning through, not profitable. And we get it every now and then from like a supplier, for example, will send like a credit application form because we're buying $2,000 a year of, whatever it happens to be. And they're genuinely trying to work out our credit worthiness. Now, obviously, we have an established track record of raising money. We have a net cash balance sheet. We understand that we're building a solid company. But I think having those foundations of a company that turns over, I think the numbers are 3, 5, 10, 15 million in FY25. Sort of, I'm trying to not provide guidance, but you can tell from our quarterly, we made reference to a few project awards, when we expect to recognize revenue. So I think it would be reasonable for somebody to deduce that we're at least aiming for 20, 25 million, like given we've been awarded 13, 14 million contracts here, 2 or 3 million there on top of our baseline sort of revenue. So I think when you're talking to your partners and your people who are looking to approve or collaborate with you, of course, it gives you more confidence running a business that has nearly 100 people, turning over a couple of $1 million a month. That's where you want to be. The fact that we can do that profitably and the business can generate free cash and we can reinvest that free cash in funding QBS type initiatives without hitting the capital markets every 6 months to keep things ticking along, of course, that's a bonus. It's a difficult way to raise a couple of $1 million, to be honest, running an operating business. So if it was to get our hands on a couple of $1 million, that's not where we would start. But in any case, combined with the experience it gives us, the credibility it gives us, and how it supports our technology business is super important. I mean, we've been in due diligence presentations over the last couple of years with, many companies, and when they're presenting, go through the steps of your technology and how about the pre-treatment and how do you make sure you remove this and how you're removing that, and being able to bring up engineers on our team who design that equipment, who go and assist in installing and supervising and commissioning that equipment and explaining how it's worked at a number of operations, compared to saying, yes, I found one of these online in France, I reckon I can get one and maybe we will install it, it will be the first in Australia. I mean, people run for the hills, right? So from our perspective, that's really what we're doing in that operating business. I mean, we're doing that to get in front of credible companies and get experience and prove ourselves. Yeah.
Yeah, well, you're preaching to the converted here. I like the fact that, well, I think effectively, looking back, building this operating strength is a necessity to be taken for serious to now pull off this technology leg of the business that was always the focus actually, but the operational strength is the foundation. I would like to close with one last question that I frequently get from other investors, which is, doesn't Parkway still need to raise money, and when are they coming back to the market? You kind of addressed it, but still maybe you want to also make a statement here.
A statement sounds very formal, Sven, but I mean,
Yeah.
what I would say is, if you look at what we've achieved in the last year in terms of growing our business, investing in people, investing in lots of equipment, ramping up our technology part of our business, when you see sites like that, there's hundreds of thousands of dollars going to consultants out the door. And after a year of running this business, we have more cash now than we did then. Gives you an idea of how much progress we can make without having to tap the market. So we don't need to raise money to keep the lights on. We don't need to raise money to advance what we're doing. And in fact, we're completely well funded to complete this feasibility study, get a fully permitted project, hopefully get some recognition from the market. And then at that point, depending on what options are available to us, do we try and self-fund $5, $10, $20 million development ourselves? Do we think it's better to sell down some interest in that? Who the prospective partners are? There's opportunities sooner. We just constantly weigh those things up and look at what's our cost of capital, what's the opportunity cost here. But ultimately, substantial sources of funding for project development, in our view, will come from industry. They're the people who benefit the most from this. And given the value we create, we're very confident we'll be able to fund this through industry. There are additional funding options. There's some examples, even in Queensland recently, Sven, where some chlor-alkali plants, critical minerals related, even not directly critical minerals, even the chemicals that go in, have received government funding in the form of equity investments, up to $30 million a couple of weeks ago. So given how strategically important this project is, we're very, very confident we can secure additional funding for project development. And in terms of the core operating business, I mean, you made reference to profitability and the critical mass the business has generated. So I think the existing core business is funded. In terms of the growth initiatives, whether it's project development or other initiatives, we'll assess them on a case-by-case basis. We also have inorganic opportunities. We've made a number of great opportunities over the years, and I think we've demonstrated ourselves as being astute deal makers. I mean, sort of structure a deal, sort of manage the risk, defer some of the consideration, align the interests, and we have a number of opportunities like that constantly that we're evaluating, and we're weighing up opportunities around, do we have the bandwidth? Do we have the capabilities? Is now the right time? And unfortunately, well, not unfortunately, but right at the moment, there's nothing that anyone could put to us that would be more accretive than getting this project permitted, so we can highlight that we have a development-ready project. So we're trying not to be distracted. And we have people put deals to us. We have people offering us, would you be interested in A, B, and C? But right at the moment, we know the best way we can create value. And maybe one thing I should reference, Sven, I know you've asked me in the past, and I think you've been pretty impressed by sometimes the caliber of people we've been able to bring into the company. And maybe it's probably worth, one thing I should mention is we've recently brought in a liquid waste management executive who's worked for at least 3 of those largest waste management companies in the last 10 or so years as head of projects, head of development, director of projects. So someone who's taken projects like this, regulated waste, through the planning, through permitting, through development, all the commercials, and through to operation. And that executive starts with us next week. It's someone we've known across a number of projects and got to know quite well. And that gentleman, for example, I don't specifically want to name the company, but there's a major international gas company to the immediate south of our operations. And this gentleman was the commissioning engineer on that project on the brine management plant sort of 12 years ago. So we are building a capability here of people who get the industry, get what it takes to develop projects, can roll out technology, can deliver projects, can enter into commercial arrangements. So we're not sort of looking at this thing overwhelmed, wondering how we're ever going to deliver this multi-billion-dollar project by any stretch of the imagination. We're just de-risking it. And all I would probably ask for is just a little bit of patience, because at the AGM, when we give that roadmap, the whole point is, and I'm a little bit, I don't want to say self-aware, but I am aware that we haven't released any corporate presentation since the last AGM. So, and that's on us as a company. And so I'm looking forward to the opportunity to outline at the AGM. So what's the Parkway story look like? What's the roadmap for the company moving forward? Because ultimately, as a shareholder, that's what I'd want to know. Like, where are these guys going to take the company? What are those milestones? And quite frankly, why do I need to be a shareholder? Like, what's that growth horizon, that growth story look like? So, yeah, very much looking forward to being able to share some of that detail with the market.
I look forward to that as well. And I also look forward to Parkway starting to be a little bit more proactive, more outbound in terms of its communication, because I think this story needs to be told. And this interview is part of that exercise in a way. Thanks for taking the time today, Bahay. Really enlightening in some of the details, even for me. Thanks again, and I really look forward to more detail in the upcoming AGM. Thanks so much.
That sounds great. Thank you, Sven. Appreciate the chat.